Hi everyone, thank you for joining my YouTube channel again. In today's session, in episode 4, we will be focusing on customer segments and the buyer's criteria. Let's now move into the most critical area, which is customers here, because revenue doesn't decline in isolation, it declines when customers change behavior. Before we go further deeper, let's anchor ourselves in core problem. Kwirtmak's revenue declined by 18.8% while the closest competitor, Bresco, grew by 9.9%. And that tells us something very important, that this is not a market problem, this is a competitive problem. And that changes everything, including the premium strategy. In the previous episode, we analyzed the technology and we reached a key conclusion: there is no clear dominant advantage. In simple terms, customers can get similar value elsewhere, and when that happens, switching becomes easier. So now we connect the dot. Revenue is simply the result of the customer decisions. If customers stay, revenue stays. If customers switch, revenue declines. So the real question is not financial, it's behavioral. So let's focus on behavior of the customers as well. Kwirtmak serves four key customer segments: aerospace, automotive, electronics, and jewelry. And each of these segments has very different priorities. And these are not casual buyers. They are highly technical, they are informed, and they are performance driven. They don't buy based on brand, they buy based on value delivered. Let's start with the aerospace segment. These customers care about one thing above all: reliability, and closely linked to the strength. These are the mission critical applications. Failure is not acceptable at all at any cost. So they are willing to pay for quality and assurance. That means premium is accepted here. Now compare that to the automotive. This segment is very different. They care about cost, efficiency, and the scalability. So here, price becomes much more important, and that creates risk for a premium player like us, Kwirtmak. Electronic segment, speed is critical. These customers need rapid prototyping and quick iteration, so lead time becomes a key decision factor here. And then we have finally jewelry. This segment focuses on finish, detail, and aesthetics. It's not about strength, it's about precision and visual quality. Now here is the most important takeaway here. Different customers value different things, so a single strategy cannot win across all the segments. And the highest risk exists in price sensitive segments, because in those segments competitors can easily undercut, and if performance is similar, customer will switch to your competitors. So why are customers switching? Two key reasons. One, lower price, and the comparable performances. And that combination is extremely dangerous. And that leads directly to the revenue decline, margin pressure, and weakening the competitive positioning. So this is not just a customer issue, it's a strategic issue. At board level, the key question is simple: which customers are losing, which segment customers we are losing, and why the customers are switching. Without that clarity, strategy will fail. In the examination, this is where you differentiate. Don't just list customer segments, analyze where the risk lies and link it to the revenue decline. In the next episode, we take this further and connect the customer behavior to revenue and pricing, because that is where the financial impact becomes visible. If you take one thing from the session, it is this: revenue decline starts with customer behavior, and unless you understand who is leaving and why, you cannot fix the business. If you're serious about mastering this case, follow the full series, and in the next episode we break down the revenue model and the pricing strategy. See you there. Thank you.